What's going on, YouTube? My name is Andrew, the Frugal Crab, and welcome to another YouTube video. So we are actually going to go over one of my most recent trades. Of course, guys, I'm just now putting out video content because I really want to show everyone how profitable doing covered call and cash secured puts are. Okay. So of course, right now I'm going to show you, this is one of my portfolios, so you can see it's on Robinhood. I do like using Robinhood to research my options. The reason why I prefer using Robinhood over Merrill Edge, which is Bank of America's platform, or Charles Schwab, or any of the other ones, is it's very seamless and very easy to use. So shout out to Robinhood for making it very easy for us small investors to research options and make money in the stock market. And that's really all you guys want to be able to do, right? So what I'm going to do is I'm going to go ahead and pull up one of the stocks that I have and a recent trade that I did on it, and we're going to look at Wayfair. So Wayfair has actually been a very profitable trade that I've used in both of my accounts. So like I said, I have another larger account, plus I have this account. Again, guys, I just want to walk you through the process of how I research these trades and what I'm looking for. Okay. So of course we have Wayfair, and on Robinhood, another thing I like to look at, just again, I like to keep it simple. You don't want to overwhelm yourself with so many different diagrams, information, numbers, things of that nature. So you click on Advanced. Once you click on Advanced, you'll see over here on the far left, guys, you'll see price, moving average for 10-day, moving average for 50-day, and RSI, or relative strength index. I actually like using relative strength index, or RSI, when I want to determine when I want to make a purchase or if I'm expecting a change or things like that. So what we're going to do is we're going to look at these lines. So we're going to look at the moving average for the 10-day, and we're going to look at the moving average for the 50-day. So something that I've noticed while trading Wayfair is that whenever the 10-day moving average hits a point like this where it's a very large gap and it's above the 50-day, typically when there's a crossing or an intersection point, which is right here, that looks like on November 21st, which was a Tuesday, whenever that happens and there's getting ready to be a crossing point, typically a big event, and when I say a big event, we're talking about a big price change is getting ready to happen, right? So in this situation, when the 10-day moving average is above the 50-day moving average at that intersection point, this is what I would consider as a point when you would want to sell, right? So if you were at high of, let's just say, 49, $50, let's just say that's what your shares were at. As you can see here, they were trading roughly about 50. Not that much. Again, we're just looking at a 1 week term. We're not looking at 2 months, 3 months, or a year. At this point, if you wanted to protect your gains, this is where I would say sell. And this is just talking about selling your shares. But because we're focusing on covered calls and cash secured puts, this is where you would want to start considering selling a put. So as you guys can see, as the 10-day moves down, what also moves down with the 10-day? The price. And as we all know, guys, that when the price falls, a cash secured put is going to become more expensive, meaning you're going to receive a better premium than when the price is going up. They work opposite of each other, right? So for me, what I would do is normally I would want to sell a secured put somewhere on this decline, right? Of course, as you can see, it starts to bottom out, or as we like to call it, a valley or a slope is what I refer to it as. At this point in time, this is where you want to start determining what's going to be your next trade or how you're going to exit. And as you guys can see, this all happened on Tuesday. As you can see on the computer, this is all on a Tuesday. So right here, it bottomed out about 10:20 a.m. A lot of trading really takes place first thing in the morning. So as you guys can see, the market opens at 9:30, 10:20, 10:30. That's about an hour afterwards. You start seeing some things steady out and probably another big spike or change in the prices, right? So in this situation, the moving average is moving back up. It's moving back up. And again, this is on a Tuesday. But look what we have here, guys. We have another intersection. So this intersection is different, though, because now the 50-day moving average is above the 10-day. Typically, what I have seen with Wayfair, and this is why I'm trading it so frequently, typically what I have seen is whenever the 50-day is above the 10-day and they're getting ready to intersect, there's going to be a spike in the price. Now you guys can see the volume right here. This is on Wednesday. Um, right here is the intersection point, and this is Wednesday morning again, as the markets are getting ready to open up. Now, if we look at the RSI, you can see here at the top of the line, almost at 70, that's considered overbought, right? At the bottom, this would be oversold. So right here, you got another intersection. So this is another trade point, and this is only the very next day. So right here, this is where you got to make the decision. Are you going to sell covered calls? This is where I would sell a covered call because now the prices are going up. Again, the premium is going to be better. So as the prices are going up on this Wednesday, this is when you sell a covered call, right? Again, you get back to this point, you start seeing the 10-day starting to move down. That's going to be your signal, or that's going to be your point where you're going to say, hey, we're about to have another price movement. And as you guys can see, when the 10-day and the 50-day cross, what happens? There's a big price drop. Now, again, this is on a week. If I were to switch it out to, let's just say a month, you guys will see, again, some bigger price movements, right? You'll see right here, the lowest that I can see over the course of 3 months is 41 and the highest being 50, right? But again, these are all just indicators that you can use to help you to make the right type of trade, right? And guys, you can make a lot of money doing cash secured puts and covered calls. You don't have to keep them long term. I sell a lot of secured puts that are at least a year out, or sometimes just a week, or 3 months, or a month. It really just depends on the timing, right? So, guys, again, we're looking at it right here. You see the 10-day is above the 50-day. Do you see the crossing right here? Do you see when the intersection happens? What happens? Big price drop, right? So this is when you want to do a cash secured put. Of course, this lasted for about, looks like a couple of days. You see that it starts to level out right here. If you also look at the very bottom, you can see that the RSI is at the very, very bottom, which means that it's oversold. If you're wanting to buy the shares of the stock, like you wanted to get into the stock, this would be a very good point for you to purchase the stock. Now, as you look at it, you look at it's coming back up, and then look what happens, guys. They cross again. Once they cross again, you see another uptick in pricing, and this would also be your signal to sell a covered call. As you can see, the 10-day continues to move up, up, up. And if you look closer at the very end, there looks like there's going to be another event here in a couple of days. And typically, if we're just going off of the seesaw motion that the stock is doing, where it's going up, then down, then up, then down, then up, then down, I would assume at this point in time when they cross, again, because the 10-day is above the 50-day, this is going to be another moment where it's going to drop. So if you're holding out of shares, and let's just say Wayfair goes all the way to $50, this is when you would want to sell your shares if you wanted to get a large return, assuming that you bought maybe the shares at a point at 40, or maybe even this low point right here at 38. This is where you would want to sell when they get ready to cross that line, right? Now, if you wanted to sell puts again, which is what I like to do, this is where you would wait for the prices to start falling and you would sell your puts, okay? And again, all I'm doing is just showing you guys one of my most recent trades. And again, this is just something that I want to do to just try to really help you guys out, because you really can make a lot of money selling call options, selling cash secured puts. So like I said, we're going to go ahead and take a look at the option chain right now. As you can see here on Wayfair, it's showing that it's up by 1%. And I'm going to show you what the charts looked like for today. So if we look at just the 1 day, guys, you see right here, the 10-day moving average is above the 50-day. What happened? They crossed right here. And then what happened? The price dropped. If you line it up with the line, you can see a big price drop down here to 48. And again, this is only on 1 day, but if you were selling puts or you were selling calls, look at where the RSI is. That is extremely below 30, right? This is a good indicator. Again, it's not going to stay there, but it's a very good indicator that this is the perfect time to sell a put, right? Also, it's a perfect time if you're a day trader or if you just wanted to get into the stock. This is a perfect time to buy the stock. If you had bought the stock at 48 at this point in time, right? And you decided you wanted to do a call right after, because I do something called a double dip strategy. So I find a point on the stock that I would like to buy. So let's just say I bought the stock today at, we're just going to round it up and say $48, right? It's trading at 49.36 right now. So if I bought it at 48, and we're going to go look at options, on the chain. We're going to go to sell. We're going to go to call. Let's just go ahead and go out about 30 days, right? Remember, we bought it at 48. If you decided you wanted to sell a call, as you can see, there's a price change. Let's just say, I don't know, you want to sell it for the $54 strike point. That means you get $181 just like that, right? And that's only 30 days out. Now, obviously, if you go to puts, you can see the puts are actually down, right? So these prices are always constantly changing. So that's why you got to determine the best time to get into the stock to do a covered call and the best time to get out if you're trying to save on profits, right? So like I said here, if we look at puts, same scenario, you see it's down 12%, but it wasn't like that earlier when it was dropping because I did buy a put myself. So of course, if you had bought it at 47, right, and you decided you wanted to sell a put for the same time frame, 30 days out, you could have done a 45, you could have done 42, you could have done 40, and of course, at that point in time, still collected yourself premiums. Now, in this situation, when I said I do what we call a double dip strategy, is you buy the stock at 48, you then turn around and sell a cash secured put, and then you also turn around and sell a covered call. So in that situation, for those days, you're going to collect two premiums. But what's so great about the strategy that I'm following is it's very hard to lose on the trade because if you think about it, guys, there's two sides to the coin. There's heads and there's tails, right? But what if there's a way that you could, no matter what, win on the coin flip, right? And so you ask the question, how do we win on the coin flip? Okay, well, if you buy the stock at 48 and you sell, and we're going to just use December 22nd, so 30 days out, and you use a covered call, let's just say you sell it for 52, that's $244 in premium. And then let's say you also turn around and do a cash secured put. And we're just going to say, again, we're going to do 45. So you can see the difference about, plus or minus $3 to $5 somewhere in that area. So you'd collect the 157, right? And then you would have collected whatever your premium was for the call as well. That could have, on Wayfair right here, that easily could have been, $400 to $500 in premium on the same day. So you ask, well, how do you win no matter what? Okay, well, like I said, there's two sides to the coin. There's a heads and there's a tails, right? If Wayfair, which we know based off of our chart that we looked at, let me go back for a second. Like we know off of our chart, if we go to advance, we know that whenever the 10-day is above the 50-day, the price is going to drop. In this situation, when the price does drop right here, what you would do, depending on how much money you wanted to make off the trade, is you just buy your contract back, right? So you buy your contract back, which is the covered call. That means you've made a little bit of money, and now the only option that you have is the put. But as we all know, as we can look at the RSI, the stock in this situation is oversold. So then what happens? We can see that the 10-day is below the 50-day. It moves up, same with the price, right? And then you're at this point. As you can see, since we came back a little bit later, you see the price point is going up, right? So this would actually verify, as you can see a little bit closer, it's hard to see, that they're getting ready to intersect, but I can already tell that the prices are going up. This is where you sell your covered call, right? Not the put, your covered call. So let's just say at this point right here, let's just say you had a put and it lost some of its value, right? And let's just say you're going to get 50% of your money back. This is where you buy your put back. When it drops again, if you decide you want to buy your call back, that's where you buy your call. If you really wanted to hold your call till expiration, you can, but as the prices go up, it's going to be harder for you to buy that option back, right? So that's why I call this the double dip strategy. And like I said, guys, I'm going to have a Patreon, a Discord, so that you guys can see these trades before I make them. Whenever I make a trade, I'll show you a video after I've made that trade so you can see exactly what I was thinking. I'm hoping that these videos will help you learn because the amount of money that I've made in such a short period of time of trading options, and when I say trading options, we're not buying options over here on this channel. We are selling covered calls and we are selling cash secured puts. One thing that I know from just speaking with people at work, for anybody that doesn't know, And again, thank you for watching this video. Please hit the thumbs up. Please subscribe. Just let me know that if what I'm doing is something that you want me to keep doing, or if you enjoy it, please just do that. But what I know from working, just like any American or any individual that is working every single day, just trying to make a living, is that it's very hard to make significant impasse or make a significant savings without some other avenue of income, right? In this situation, I've been able to, on most cases, generate anywhere between $1,000 per week all the way up to $4,000 just based off of the covered calls and the cash secured puts that I've sold, right? And like I said, on this channel, we're not buying because buying, in my opinion, this is just my personal opinion, is more riskier. Of course, there are going to be the possibility for bigger returns, but they're more riskier than selling a cash secured put or a covered call, right? When you buy an option, again, you're on the other side of a coin per se, believing that, hey, I can buy this stock or this option, Wayfair, I can buy it at $40 or $48 a share for 100 shares, right? And I believe that it's going to go up and I'm going to collect the difference, right? I I personally believe when you are buying options, you're more so gambling than you are when you're selling. I believe that selling is a little bit safer, a little bit more secured, and it's easier to predict. And that's what we're looking for, is stuff that we can easily predict, so that we're on the likelihood of winning the trade, right? So again, guys, like I said, this is the end of my video. Just starting out, hoping this is something that you guys like, hoping it gets pushed out into YouTube. But again, hit that like button, subscribe. If you have any questions or comments, please leave them below. And guys, I look forward to the next video. And if you have anything, don't hesitate to shoot me a message, and I'll see you guys next time.